We're waiting on the real ruling from the SEC after yesterday's fake out. Got some people in trouble. Maybe X, Elon Musk's security team, maybe the SEC needs to check in on where their interns were. Steven McClurg joins us, Chief Investment Officer at Valkyrie Investments from the New York Stock Exchange. Valkyrie, of course, home of the wonderfully titled WGMI Miners ETF. Came off just a huge year. Steven, welcome back to the show.
Hey, Oliver. Thanks for having me back.
Absolutely. Hey, give me a quick thought on yesterday. I mean, did that change any of the game, the hack or whatever it was?
Look, I don't think that changed anything at all. We're still on track. We're still working very closely with regulators and every other service provider on Wall Street to get this thing launched, as is everybody else. A SIM swap on a phone is something that's actually very common, and it could happen to almost anyone. And we've got measures in place over at Valkyrie to make sure that that doesn't happen to us. But it is a pretty common occurrence, and people have stolen a lot of money out of bank accounts using that. Twitter's the least of your worries.
Okay, so you don't think Gary Gensler and team, you don't think they spoiled their appetite?
No, I don't. I mean, there's always nefarious actors out there, whether they're attacking communications or financial services, and we've got really good cyber teams over where we are, and I'm sure a lot of government agencies do as well. I don't think it spoils them, but I think whoever did this is going to be caught.
Okay. What about, I mean, look, I'm actually not even as a crypto cynic, I'm not like big believer what I'm about to say, but some would argue that it is just kind of another negative reflection on an industry that's been through a lot of fraud and blow-ups over the last couple of years. Do you think that it hurts the case, or what? I guess up to speed as of now, what do you think the odds are that you and others will get approved today?
Well, look, I think yesterday I was out saying the odds were 95%. They're probably 96, 97% now. Of course, anything could happen. But
if they were 96 yesterday, they got to be 95 now.
Exactly. I mean, look, natural disasters. I mean, there's anything could happen. And I come from a background of risk management, so I'm always evaluating what the risks are, what could prevent this from happening, and there's very little, in my opinion, that would prevent this from happening at this point in time. It looks like, hopefully all systems are a go. We don't know anything for certain, of course, but everybody's prepared and ready to go for a tomorrow launch.
Yeah, fair enough. I feel like it's a very likely event as well, from my understanding of the ETF experts I follow, et cetera. So I think probably, we're going to get a tweet that looks a lot like we got yesterday. Okay, you're in the running, by the way, with your Burr, BRRR. Again, you guys have a pretty great team. Who's doing the tickers over there? Because We're Gonna Make It was good, and Burr is probably, I think, one of the better ones of the list that are up for grabs now.
I've been mostly the ticker guy so far.
Okay.
So I learned it from a very solid team from, I don't know if you've heard of the Legacy Claymore Investments, which was an old ETF shop that Guggenheim bought years ago, and those guys were master at tickers. So I just picked up what I learned from them.
Okay, but what really stands out is that right now you're still expecting to, you're still planning to do an 80 basis point fee when a bunch of others are like waiving fees. Is that correct?
Well, Oliver, I believe a lot of that has changed in the last few days. So there's been a lot of updates to fees across the board. And we'll constantly evaluate and see if anything else needs to change. But I believe our last filing is much lower than that, as well as waiving fees as well.
Okay, all right. So right now, if they get approved and your fund debuts, what's the expense ratio going to be at?
Well, as of today, our last filing, I believe we have 49 basis points and a 3-month fee waiver.
Oh, okay.
So that's the latest.
Okay.
But again, we're always evaluating and making sure that we're competitive with the market.
Okay, because I was looking at a Bloomberg article from like 3 days ago that had you 80 bips, so that's outdated.
Oh yeah, hey, this is crypto, man. Things change every
Sure.
minute.
Okay, great. All right, well, I appreciate the
But,
update. Okay.
Absolutely.
So what do you think is going to determine who gets the flows here? I mean, I'm counting 3, 6, 9, 11, maybe 12. That's a lot of supply for funds. What are your expectations for flows if indeed the water starts flowing?
Yeah, look, Oliver, I mean, I've never seen this in my entire career of launching ETFs where you have this many issuers going on the same date. So it's going to be quite fun to watch. Based on our analysis, we'll probably see somewhere between $2 and $4 billion in the first week. It could be more, could be less. We really don't know, but that's what it seems to be, and we're hoping to get about 10% of that. So, and then I think the real flows are going to be coming in over the next year and even 2 years, because it takes advisors a long time to actually evaluate managers, evaluate track records, evaluate the product themselves, to go through various committees and make sure that it's a suitable investment for their own clients and who they're going to choose. Usually they choose two providers when there's a lot of them. Generally there's one legacy and one niche player like us that only focuses on crypto. So we hope to be into that category as financial advisors evaluate various ETFs.
Well, you definitely deserve credit for your miners ETF, which has outperformed all the other Bitcoin proxy through equity, I should say, stock crypto ETFs. Huge rally over the past year. I watch Block a lot, BLOK, which was one of the early ones, and you guys just crushed them last year. They were up 73%. We're going to make it. It was up 170 WGMI. When you look at the number of funds that are coming to market, the fact that there already is a pretty healthy environment for Bitcoin linked or crypto adjacent funds like your WGMI, where is the confidence coming from then that there is like a whole other spigot of flows that haven't already been in this space? Because there's a lot of ways that if I wanted as an advisor to pitch crypto to my client or as an everyday trader to have already done this, why does a spot ETF suddenly bring in some big new market?
Yeah, look, as a former allocator to institutional clients, when it comes to things like gold, for instance, I would always choose the gold miners over gold spot itself. So I believe something like a Bitcoin miners ETF or one of these other Bitcoin adjacent is actually going to get more of the flows than Bitcoin spot ETFs do themselves.
Oh, wow.
A lot of people, I believe, are going to continue to buy Bitcoin directly. It's actually another way to do it, and people are now a lot more comfortable doing that. And the ETFs just give another avenue for investors to be able to get direct access to Bitcoin. But the business of Bitcoin is what I find interesting, and I believe most of the flows are going to go there.
Or do you believe that this is going to be a meaningful price discovery event to the upside, like so many crypto proponents? Scaramucci's been on here talking the spot ETF, that's what gets us to 100K. Tom Lee talks about it all the time. Kathy Wood. I mean, every time I tweet out what's the bull case for Bitcoin, my comments are full of spot ETF, spot ETF. Do you think it's going to be a big event for price?
I actually do, and more importantly, I think it's going to be a bigger event for adoption. Because the people that are not comfortable either putting themselves or their clients into, directly into an exchange buying Bitcoin or some other method, going through a regulated product like an ETF is something that people are a lot more comfortable with. So you'll have more market participants, you'll have more price discovery. I think volatility will come out of the market, but the adoption of investing in Bitcoin will actually be one of the factors that drives Bitcoin up this year, along with, of course, the halving that's happening with the miners, which happens about every 4 years. It's coming in April, along with rate cuts that we expect to happen in May or June. So all these three factors will really contribute to where I believe Bitcoin will go, which is about 150,000.
Rate cuts, I'm on board with you. Everything else, I would argue otherwise. Halving is like, or don't get me started on halving, but the rate cuts for sure. I mean, right, Bitcoin's always been very responsive. It has been over the past years. We've been pricing in this big shift. But if you had to describe the thing, I'm still having some trouble figuring out is like what investor, what consumer, what type of person it has not been in crypto that's waiting for the spot ETF. Can you describe that person to me? Who is that client that hasn't been in the game that's waiting for this thing to push the button?
Yeah, I'll describe my mom, who still uses a flip phone and uses a PC to play solitaire. She's not going to sign up for a Coinbase or a Gemini account. She's not going to deal with the Trezor. But in her 401k, if she sees, oh, I can buy this Bitcoin ETF, that's a little bit more attractive than trying to figure this out myself. And that's probably one of the more extreme examples. But generally, people that no, she doesn't even know what that means. But Bitcoin's probably going to be one of those events. The Bitcoin ETF is going to be one of those events where there's a little bit more excitement around it. And now if she had a financial advisor, yeah, they'd probably be putting her in one of the crypto or Bitcoin adjacent ETFs such as that.
So the thing I guess I still have the block with is like the vehicle for sure. I mean, the ETFs are the premier investing vehicle today. I don't think anybody really disputes that. I feel like it'll be the best, cleanest wrapper that Bitcoin's ever been in. But if I'm playing solitaire instead of Texas Hold'em, then that seems to say more about my risk tolerance. I mean, aren't people that are not in crypto right now not in it because of risk tolerance? I mean, I don't think this changes its Sharpe ratio, does it?
Yeah, no, I mean, it really doesn't. But at the same time, once you have either an asset or a security in an ETF wrapper, it does create less perceived risk. And I say perceived risk very carefully because there's a lot of risk that actually isn't risk, and a lot of perceived risk that isn't risk either. And some things that are risky that people perceive to be very risky, right, or not risky at all. Going back to my days in asset-backed securities, right? Right after 2009, everybody perceived asset-backed securities to be extremely risky when they were probably the less risky thing in the bond market, but you got paid for owning them. Same thing here. Anytime you put something in an ETF wrapper, the perceived risk goes down. So what we really have to focus on is making sure that security, good security measures are in place. We're working with really good vendors. We're working with really good custodian solutions, and making sure that we've taken out as much risk as you can. Nothing's zero risk.
What happens if the big liftoff doesn't occur once this thing goes public? What's the timeline? Because, boy, expectations sure are running high. If it doesn't suddenly go to the moon, do you worry that people will bail now that there's no other adoption really to go from here?
Yeah, look, I think a lot of people are saying that they believe the Bitcoin ETF is priced in. I think what's actually priced in is the fact that it may not happen, right? So I do think we get a little bit more price discovery, some higher prices throughout the next couple of weeks, even if there's not a big flood of money coming in. Which, by the way, I'm not in that boat that believes that we're going to see hundreds of billions of dollars in the first couple of days. I think it's going to be a lot more muted. It's probably going to look a little bit more like Bitcoin futures ETFs when they launch. A couple of billion, or at the most $4 billion. I hope I'm proved wrong, but I think it's going to be a little bit muted on the first couple of days. But really, it's going to be that 2 to 3 year time frame, which is about the amount of time that a lot of bigger institutions and the wirehouses on Wall Street want to see a track record. If you're Morgan Stanley or Merrill Lynch, you're not going to do anything until you've seen a 10-year track record from a manager, or at least a longer track record from a manager, and a 1 to 3 year track record from the actual ETF itself. So that's really when this thing's going to pick up.
All right. Steven, thank you very much for your time. Best of luck today.
Absolutely. Thank you, Oliver.
Sure thing. And again, credit for doing pretty darn well, picking the biggest miner winners in WGMI. Steven McClurg, CIO at Valkyrie Investments, with 3 R's, the Spot ETF application out.